Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I am your host, Whitney Sewell. Today, our guest is Danny Newberry. Thanks for being on the show, Danny.
Hey, thank you so much, Whitney. I'm really appreciate you being inviting me on the show, and looking forward to chatting with you.
Danny is the founder and president of Value Investment Group. He has built Value Investment Group into an integrated and successful firm that has acquired more than 30 properties since its inception in 2008, acquiring assets in many states: Utah, Arizona, Nevada, Colorado, Wyoming, Idaho, Oklahoma, New Orleans. He's all over the place. He's doing lots of big stuff, lots of great stuff going on. Danny, would you fill in the gaps a little bit, how you got into real estate, and then we'll move into how you got in the syndication business specifically?
Absolutely. So the beginning of my story really started when I was going to college, and I was going for a business major. And at the same time, I was starting to get really interested in, success principles and following successful guys that in their own field. And I came across a book that a lot of people have, Rich Dad, Poor Dad. And it really sparked something in me. And so I ended up joining the coaching program. And I think I bought 3 apartment complexes my first year. They were all smaller, duplex, 4-plex, and a 6-plex. And from there, I went off to buy about another dozen 4-plexes between Utah and Las Vegas. We got up to about 50 units. And then from there, we decided, if we really want to grow the portfolio and the cash flow, we got to think bigger. So we ended up buying a 48 unit, and then we bought a 138 unit, and we just kept scaling. And so we got to a couple hundred apartment units. And then at that point, my wife and I decided that, the multifamily industry, as tedious as it is, it really wasn't something that we wanted to continue to build in. And so we really sold off the entire portfolio, and ended up transitioning over into true commercial assets, which is shopping centers, industrial warehouses, and medical office buildings. So that's strictly what we focus on now. We've been doing that for quite some time now, and we're buying about a deal a quarter, and just really majority of our focus is in the Southwest, Northwest, and Rocky Mountain region, and primarily value add opportunities. Nice.
So, so you got started, you said were you in college when you started real estate?
Yes, I was. And I actually didn't finish college because my second year in college, I bought those 3 apartment buildings, and I realized, man, if I keep going to school, my paycheck's going to look like, maybe if I'm lucky, $100,000 a year, versus these 3 deals. The net profit on them, if I wanted to sell them, was well over that amount. So, at that point, I decided, this is a lot of fun. I really like it. I enjoy it, and I'm going to go do this full time. And so that's what I ended up doing. I think I was about 19 or 20 at that time.
That's impressive. So in college, purchased those apartments at 19 or 20. How did you make those deals happen? Did you have investors? Did you have people partner with you? Or was it something you did by yourself?
I did. I had investors. So my first deal, actually my second deal, was a 6-unit apartment complex, and it was $150,000. It was bank-owned asset, and it was completely vacant. I didn't know how I was going to buy it, but I put it under contract, and I was like, okay, I got to figure this out. Well, my best friend's father ended up being the hard money lender on that asset. So he liked the deal. He gave me the money. He gave me about $180,000 because I needed to fix it up, and then I needed to fill it up and then refinance him out. So I think I was paying him 8 or 10% interest, and I was able to refinance him out in 6 months. We filled up the property, and it appraised for over $300,000.
That's impressive. So how did you learn the process? How did you have the confidence to go into that, a vacant property and make something like that happen?
It all comes down to education, Whitney. I mean, at the end of the day, I would have never been able to do that if I wasn't doing the education, reading the books, finding mentors and coaches and advisors that had already done it and were able to advise me in a way that said, hey, you're onto something here. And these are the next steps. Now that you've found something, put it under contract, do your due diligence, look at the marketplace, look at the rents, get the sold comps, get everything and put it together. And if it makes sense at the end of the day, well, it's time for you to close that deal as fast as possible. So that's what I did.
Nice. So you got up to a couple hundred units, and then you all decided to switch, or to do something else. But it's so impressive. But let's back up. So when did you really learn the syndication business? You did that property, you refinanced it, you had your best friend's father, as a hard money lender. When did you say, okay, I got to learn the syndication side of things so we can do bigger deals?
It really came down to when we started buying the larger apartment complexes. So like the 48 unit, and then we went into a 138 unit apartment complex. At that point, it was like, okay, I had, two partners. I either had a hard money lender, I had a family lender and partner that was coming in on these fourplexes and duplexes. And, I think we bought a couple 10plexes, but I realized, look, in order to scale, you have to get into the syndication business. Because, unless you're born with a silver spoon and, you just got a lot of, I don't know, family money or something, there's no way to do it without syndication. And so that's when I decided to get everybody that I knew involved. And then from there, build relationships with them and, create returns and get them back into my next deals. And then they told their friends, and that's really how it scaled. So, to date, it's been a really great process for us because most of the partners that I started with still invest with me today.
Nice. So what would you say has been the hardest part of the syndication business?
I think the hardest part is truly it's when you have a deal under contract and you have to close that deal. You have a limited amount of time to do all your due diligence, to put together the capital stack, and to close the deal. Usually it's 60 to 90 days. And so to get your investors on board, you got to put them into high gear too, and they need to commit, within a 24, 48 hour period when you're raising the capital, and, they need to send over their funds. And so if someone says they commit to the deal and then they don't send their funds, within a few days or a week or 2 weeks later, and then they come up with an excuse that they're not going to come in, well, that puts you behind. And you can't really go back to the lender and say, hey, my partner didn't come up with the money, you got to give me some extra time. It doesn't really work that way. So it's just, I think it's just the time frame to get a deal done is the hardest part of the syndication model.
Can you give us some tips or maybe things you've learned to get investors to commit within 24 to 48 hours?
Well, you get on, like the way I've done it is I get on a phone call, we go over the whole deal in detail. And at the end of that phone call, I say, look, is it something you're interested or not? Usually they're going to give me a firm commitment, yes. And then if they need time to think about it, they say, hey, you know what, I need to really sleep on it. I need to talk to my spouse about it. I say, no problem. Can you get back to me with 24 to 48 hours? And they, usually always say yes. So that I always get a commitment from them that they'll get back to me in that time frame.
Nice. So, and I like too that it's a conversation that you're speaking to them, and they have an opportunity to ask any questions just immediately and just really feel you out about the deal. I'm sure they feel more comfortable about the deal, just being able to speak to you right off the bat about it.
Absolutely. Yeah, it makes a big difference. If you send out a package and they can't get a hold of you and, they're trying to read the numbers, maybe they don't understand something, but there's no one to talk to about it and they have to make a decision. Yeah, most of the time they're probably going to say no, right? Because they, there's a lot of times you gotta go through the deal. You gotta, get more into detail into the business plan and what your ultimate vision is for that deal. And so, and a lot of times paperwork can't always show that.
So now that you've started with small multifamily and moved up to, through large multifamily and now into the commercial space, what would you tell someone who comes to you and says, I'm sure you hear it, Danny, that, I want to get into this business. What do I need to do to get into this business? What do you tell somebody? What's some of the first steps?
Okay. The first step is get motivated, right? If you got to get motivated, you got to get educated, you got to build a great team. You got to surround yourself with, amazing advisors, build alliances, and then take massive action. That is like the number one thing. That with, work on yourself every single day, creating successful rituals and habits. You got to be hungry. So surround yourself with the right partners, mentors, advisors, and again, go big. Don't hold back. Take massive action. I think that's the biggest thing that most people. They do everything else, but then they don't take the action. So,
I agree. Opportunity is on the other side of fear. I think Gary Keller said that, and I really like that quote.
Yep.
So what are some successful habits that you've created that maybe has helped get you where you are?
Okay, so I have about a 3 to 4 hour morning routine. I wake up at 5 a.m. typically, and I do quite a few different things. So anywhere from stretching to meditating to exercise to releasing endorphins to getting fluids in the body. Essentially doing my daily planner of what am I going to accomplish today? What am I going to do today? What do I have to get done today? Who do I have to follow up with? What am I going to get LOIs out today? How many deals am I going to underwrite? So, I do that. I do my goals. I do my gratitude. And so I get motivated. I do a mastery session every morning. So it's like, motivation isn't something you do once a year. It's something you do every day, right? And you got to put yourself in peak state of mind every day to get to the place to where you can, execute effectively to really achieve your goals and dreams.
I like that. You have to do it every day. Put yourself in that state of mind every day. I like that. So what's the number one thing that's contributed to your success other than maybe your morning routine? Anything else you could tell somebody, hey, this, you really got to do this?
Yes. It's who you hang out with. It's who you surround yourself with. It is the people that are putting ideas and information in your head consistently. So you got to look at your peer group. You got to look at who you hang out with. I would say, again, by putting yourself in peak state of mind and putting yourself around the right people, the right partners, the right mentors, the right advisors, that is going to get you to where you want. You're not going to be hanging out with millionaires and not be able to raise your game. And if you don't raise your game, they're not going to want to hang out with you. So I definitely recommend that, you find the right people to hang around with and push yourself. Always be around people that are, stronger, smarter, faster than you. So that way it makes you elevate your game.
So let's move to, why multifamily, why not multifamily now? And then, and growing that business, moving into the more commercial or office space, that type of thing. I hear conflicting stories about, we don't want to do this or, I want to do this. So I'd love to have your opinion, and why you moved out of multifamily and now into the malls or office space.
Yeah, well, I think the multifamily space is oversaturated. I think everybody is really in that space that goes from single family. Everyone, the natural transition is to go to multifamily. And so, cap rates are extremely compressed. It's hard to find value add deals. It's just a tougher marketplace. And not to say that you can't find great deals, because you can, and you can create value. But for me, multifamily was more of a tedious asset management type of property. So, it was always the same problems. It was always the same excuses from your tenants of why they can't pay rent or this or that. And for me, I like true commercial because of the creativity involved, to find a shopping center that's 50% vacant and turn it around to get it to 100% with successful businesses, or find, a medical building that is, being mismanaged and is, dilapidated and needs CapEx and it's got, vacancy issues, and to be able to turn that around and really structure leases that create huge profits. I mean, one lease could be, I just signed a lease with Ferguson on an industrial warehouse that we bought back in June, and that lease is worth $2 million. So it's unbelievable the amount of equity you could create in a property by these leases. So multifamily is not necessarily based on the leases. They don't look at the tenants and say, well, this tenant isn't as good as this tenant, and so I'm going to value it differently. But on the commercial side, it's all about the tenants you put in place. It's all about, your tenant mix. It's all about how well they're structured and how good those leases are. I mean, I have a lease that's over 60 pages long. And then I also have leases that are, 15 or 20 pages. So it varies depending on the tenant and who they are. But I think there's much more brain damage, as I call it, in the commercial world. And I like that aspect because I like to dig deep and how can I create extra value on these assets through the leasing and through the negotiation of dealing with these national and regional credit tenants. So to me, it's just fun. It's exciting. It's different every time. It's not cookie cutter. And I always felt like multifamily was cookie cutter. I learned it, and I know multifamily like the back of my hand. I just got bored of it, to be honest. So, I focus now strictly on true commercial assets. Retail shopping centers, industrial complexes, and office and medical buildings. And, not to say I won't buy multifamily again, just right now is not the time, in my opinion. So I'm going to wait until the market shifts for multifamily. And then at that time, I'll probably end up buying some higher quality assets in that space.
Nice. Are you tired of answering emails from investors about when they'll receive their K-1s? Let the real estate CPA handle the accounting and taxes on your next syndication, and they'll file your tax returns by March 15th so you can get your K-1s to your investors by the individual filing deadline on April 15th. Not only will this reduce headaches, but it will help you retain investors over the long term by improving investor experience. The Real Estate CPA is now offering a special virtual workshop to the listeners of the Real Estate Syndication Show on how to answer tax-related questions from your investors. Learn more today by visiting therealestateCPA.com/syndication. Tell us, the person that's looking to get into the commercial aspect like you are in the strip centers, the malls, and the commercial buildings, medical space, give us some tips getting started in that aspect if we're coming from multifamily. What do I need to know?
So I would say, again, find a mentor, find advisors that have already done it. And it's kind of funny because 3 partners that have invested with me on deals as a passive partner have now become managing partners with me on other assets. So it's funny how this business grows, right? You get into a deal with someone, and then you create a great relationship, and then you guys go off to do a deal or a couple deals or many deals or a dozen deals together. And so there, I would say that the best way to get into it is find someone who's already done it, partner with them, whether that be on the passive side or even as a general partner on the property, and that's really how you're going to get the best results. If you try and get into commercial and you don't know what you're doing, I'd be scared for you. It's you got to be really, really careful. There's a lot of money to be made, but a lot of people lose a lot of money, and unfortunately, that's where we find a lot of our opportunities is the people that don't know, get into this business and don't understand it and don't know how to turn these assets around.
What are a couple of the biggest hurdles you've had to cross, to get to where you're at?
The biggest hurdles is, I would say that, it just takes time, right? Real estate is a slow moving business. You want to turn things around quickly. And sometimes they take a little bit longer, than normal. So, with anything, whether it be multifamily, or commercial, you just go through it in the sense that you're looking to really look at this from the long term. You're looking to create long-term value. And, I think that ultimately growing is probably the hardest part, because once you learn something, you feel comfortable in it. And you can say, well, I could just stick with these 4plexes. I learned these 4plexes. I could do this all day long for the rest of my life. But how are you going to grow to 400 unit apartment complexes, right? Well, that's going to take a mindset, number one, and growing that mindset and getting yourself to that place where, you feel confident enough to be able to do that. And you have the education behind you to take something like that down. So it's definitely working on yourself. It's definitely getting your mindset in the right place. And it's definitely, taking action and getting out of your comfort zone.
Tell us a little bit about the last deal you closed on.
I closed on a 43,000 square foot industrial park in Denver, Colorado. And it was an auction deal that we bought for $3.5 million. And then there was a 5% premium. So $3.7 million all in. It was 100% occupied, but the main tenant, which occupied 50% of the building, which was Eaton, they were up for renewal in 9 months. And so no one wanted to bid on the deal, because if they left, it was obviously going to really diminish the value of the asset. Well, we knew a few days before the auction started, we had inside information that they had just submitted a LOI, a letter of intent to renew for another 5 years. And so if so we bid based on if they left, we would still be positively cash flowing, but if they stayed, there was tremendous value there. So we closed the deal at $3.7 million. 2.5 months later, we finalized the renewal with Eaton, and we appraised it in May for $7.5 million. We refinanced, pulled out $4 million, so no money in the deal, and we cash flow about $26,000 a month. So what is that, like almost a little over $300,000 a year in that one deal.
It's very impressive. So, how did you know that they were going to renew? How did you get that inside information?
So as we always do with our deals, you're not technically, they don't look at it like you should do this, but when you're in due diligence, you want to talk to the tenants. You want to find out, hey, how's the business doing? What are your plans? What's going on? So we reached out to the leasing broker who represented Eaton, and we said, look, we're interested in this deal, but it makes a big difference on what Eaton is going to do. And she was like, well, I'm not really supposed to, give you any inside information because it's going to auction. But what I will tell you is that we just got an LOI for their renewal. And I said, well, is there any way that you can confirm that? Because it really, if we can confirm that, it really changes where we're gonna end up at on the price going into this auction. And she was the day before she sent over the LOI from Eaton, and that was good enough for us to say, you know what, okay, if we buy this at 3.7 and they leave, the value of the deal is about 3.7. Actually, our number was $4 million. We were willing to go up to $4 million on the deal, and if they left, we were still going. We still had the upside to fill it, but it would take some time. We'd have to put in quite a bit of TI dollars, which is tenant improvement money for another tenant to come in, and it'd probably take 6 to 12 months to backfill that space. So when we got that information, we knew. So we went at the deal really hard, and we ended up being the winning bidders.
Wow. So it sounds like even if you had to put the tenant improvement money in and wait 12 months with that kind of upside, it would have still been worth it.
Those are the kind of deals we do. We're always looking we're looking at our downside risk first, right? We want to make sure that, hey, if I buy this thing isn't going to put us in hardship if worst case scenario happens. We want to make sure we buy it right, and that when we see what we do with our own portfolio, and I feel very, very safe with everything that we own, is because we're really low leverage. When you look at the value versus the debt we have on all of our properties, we're at about 50-60% loan to value across the board on my portfolio. So when I look at that, I say, hey, these are the type of assets, even if we go into a recession, that aren't going to be going back to the bank. I'm not 80% loan to value, and I don't have a very thin margin of error to, if I lose a big tenant or a couple tenants, that it's going to put me, put the building at risk. And so that's the way we look at these deals. That's the way we underwrite them, and that's the way we buy them.
Nice. Yeah. So yeah, like how you said, you underwrite even if this tenant was leaving, you underwrote that in there. And so I guess that didn't mean that the other tenant, the other 50% would make the property cash flow. However, you just accounted for maybe having a vacancy or for 12 months and having to do the improvements. Is that right? We
were still positive, but only it was so small it was like $1,000 or something. It was like nothing significant, right? So I think Eaton pays somewhere around $20,000 a month, or maybe 22 all in. So and our cash flow is $26,000. So when you take out reserves and stuff like that, then we still had a couple thousand cash flow there.
Nice. So Danny, what's the number one thing that you've done to improve your business recently that we can all apply to our business?
The number one thing to improve your business is, get your team in order. Have the right team around you, because when you find opportunities and you don't have the team to execute, having the right lender on board, having the right, property manager there to run the numbers with you, having the right, advisors that have done that kind of deal, or if you've already done that kind of deal, the area already, and being able to have a team boots on the ground. So all these things come into play. So I would definitely say just having, a really structured team in place, and everyone knows what they're supposed to do when an opportunity comes available. So, for us, team is everything. And I would say that to your listeners is definitely get a great team in place.
Nice. So what, how have you picked your team members? How did you find them? Give us some, I guess, maybe a couple techniques before we have to go of really creating that just best team possible.
So again, it comes back to who's your team, who are your partners, who are your mentors. And for me, like one of my partners was on your show not too long ago, Alan Schnurr. And, he's such a fantastic partner. I mean, he's really just, he's done some incredible stuff, and I've always looked up to him, and it's just been unbelievable to be in partnership in over a dozen deals with him. And so, the reason I wanted to partner up with him was because I knew, that I knew his integrity was there. I knew that he, had a lot of experience under his belt. And we meshed really well. We like to have fun. We like to have a good time. We see eye to eye. But we also bring different qualities to the table when we're taking down these assets, right? So, I would say that finding people that have, your weaknesses and that you get along well with and that you can grow with is essential. So, I definitely say that's key, is finding people that really are on the same playing field and that want to grow and that want to, push each other to keep, getting to the next level. And so that's what I like in partners.
It's great. Thank you so much, Danny. You've provided so much great content today, and I know the listeners will get a lot out of your show and the show. Will you tell the listeners how they can get in touch with you and learn more about your business?
Absolutely. So my website is valueinvestmentgroup.com. You can go to the website. You can put in your contact info there, and we can schedule a meeting. I'm always looking for new partners. I'm looking to create strategic partnerships, bring in investors, and really create relationships for the long term. Right now, we've got a new deal in Las Vegas that we're working on, and that we're going to be doing a syndication on. And so, would love to talk with anyone that might be interested. And my cell number, if anyone's interested in, shooting me a text and want to schedule an appointment, is 435-590-9095. And I look forward to chatting with all of you.
Wow. Thank you so much, Danny. That's an open door for somebody that wants to connect with Danny, ask him some questions, or maybe partner and bring some value to his business and yourself. But, thanks again, Danny. And I hope the listeners will just follow up with you, and I hope they'll join us on the Facebook group and connect with me on my website, LifeBridgeCapital.com. You can also schedule a call and see how I can help you, and I'm happy to any way I can. So please reach out, please connect, and we will talk to you tomorrow.
Thank you so much, Whitney. I appreciate it for having me on the show. It was a blast.
I want to tell you about an upcoming real estate investing conference hosted by my good friend, Joe Fairless. Every February, Joe brings his best ever conference to Denver, which brings together the top high-level experienced real estate speakers and sponsors that has proven to be the best ever networking, content, and strategies to help grow your portfolio. The earlier you buy, the more you save. Ticket prices increase weekly, so you want to buy today. I attended in 2018, and I can guarantee you do not want to miss this conference. February 22nd and 23rd, 2019 in Denver. Go to besteverconference.com to reserve your seat today. That's besteverconference.com and use hashtag Whitney to save 10%. That's hashtag Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.